Hi everyone, this is Mike Ingel, your trusted real estate professional, sharing with you significant changes in the housing market and help more Canadians achieve their dream of homeownership. Let's dive in. The Bank of Canada's decision to lower rate. The Bank of Canada recently reduced its target for the overnight rate to 3.25%, with the bank rate at 3.5% and the deposit rate at 3.25%. This move aims to support economic activity and ensure borrowing costs remain manageable for consumers and businesses. While Canada's economy has shown resilience, challenges such as supply chain disruptions and global uncertainties persist. Lowering the rate is intended to stimulate economic growth, making borrowing more accessible for Canadians. For those of you considering buying or refinancing, this is welcome news. Reduced rates could mean lower mortgage costs, providing an opportunity to either enter the market or secure better terms on your current mortgage. Big changes to mortgage rules. To address affordability and help more Canadians own homes, the federal government has announced significant reforms. 1. Increased insured mortgage cap. Starting December 15, 2024, the price cap for insured mortgages will rise from $1 million to $1.5 million. This adjustment reflects the realities of today's housing market and allows more Canadians to qualify for mortgages with a lower down payment. 2. 30-year amortizations expanded. The option for 30-year insured mortgage amortizations is now available to all first-time homebuyers and buyers of new builds. This change, effective December 15, 2024, will lower monthly payments and encourage the construction of new housing, including condos, helping to address Canada's housing shortage. 3. Easier switching between lenders. Under the Canadian Mortgage Charter, insured mortgage holders can now switch lenders at renewal without undergoing another stress test. This change promotes competition and helps Canadians secure better rates. These reforms aim to reduce barriers for millennials and Gen Z buyers, making home ownership more accessible while also stimulating new construction, a crucial step to tackling Canada's housing crisis. A comprehensive housing plan. These mortgage changes are part of the federal government's ambitious plan to build nearly 4 million new homes, the largest housing initiative in Canadian history. Alongside this, several supportive measures are already in place. Tax-free First Home Savings Account. Canadians can save up to $40,000 tax-free towards their first home. Enhanced Home Buyers Plan. First-time buyers can now withdraw up to $60,000 from their RRSPs to use towards a down payment, protecting home buyers and renters. In addition to making mortgages more affordable, the government is introducing measures to protect both home buyers and renters. The blueprints for a Renter's Bill of Rights and a Home Buyer's Bill of Rights have been released. These initiatives aim to prevent unfair practices like renovictions and blind bidding, simplify lease agreements, increase transparency in home sales by making price histories accessible. Provinces and territories will receive $5 billion in funding through the Canada Housing Infrastructure Fund to implement these protections. Economic context. In Canada, economic growth slowed to 1% in the third quarter of 2024, with the fourth quarter looking weaker. While consumer spending and housing activity picked up, business investment and exports declined. The unemployment rate has risen slightly to 6.8%, though wage growth remains strong. Globally, economic conditions are mixed, with the U.S. economy showing strength, but Europe and China facing headwinds. The Bank of Canada expects inflation to hover around its 2% target over the next 2 years. Temporary measures like the GST holiday on certain goods will provide short-term relief, but underlying trends will remain the focus for monetary policy decisions. For home buyers, these changes present opportunities to enter the market with more affordable options and better mortgage terms. For sellers, increased buyer activity could mean higher demand for your property. And for investors, the expansion of 30-year amortizations and incentives for new builds could open new avenues for profitable ventures. If you're thinking about buying, selling, or investing, now is a great time to start planning. Feel free to reach out to me for a personalized consultation. Together, we can navigate these changes and find the right opportunities for you. Thanks for tuning in. Don't forget to like, share, and subscribe for more updates on the real estate market. Till next time, this is Mike Ingel, your go-to real estate expert.